Heya, cryptozens. Tonight's stories. Fiat is still champion of money laundering. Coinbase sued over claims of unregistered crypto securities. It's 10 p.m. Pacific time. The date is March 20th, 2022. Welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. We bring you news stories on familiar topics. And keep in mind, nothing in this show should ever be considered financial advice. So where's all the crypto? Don't tell me it's on the exchange. I checked. Right now, the amount of Bitcoin on the exchange, 39-week low. In fact, the amount that was on exchanges on St. Patrick's Day was just 10.25% of the supply. That is the lowest amount since December 2018. And it's not just Bitcoin, Ethereum too. Over $1.6 billion worth of Ethereum has left the exchange. Now, I think a lot of that is going to be staking, which I think is a good sign. It's a sign of confidence in the asset and a sign of confidence that Ethereum's proof of stake transformation is going to be successful later this summer. Now, before we get into tonight's stories, let's take a quick look at the markets. At the time of writing, the global crypto market cap is $1.86 trillion. That's down 1.6% on the day. The top 5 cryptos by market cap are Bitcoin down 1.43%, Ethereum down 2.22%, Tether, Binance Coin down 1.58%, and USDC. The global NFT market cap is just above $10.12 billion. That's off 0.06% in 24. So it's just about even. Now, the top 5 NFT collections on OpenSea by sales volume are Bored Apes down 54%, Mutant Apes down 51%, CryptoPunks down 43%, CloneX is down 20%, and Azuki is down 20%. Now, keep in mind, some of these collections have very volatile prices, so do your own research. Fiat is still champion of money laundering. So there's this constant narrative, and it's FUD, really, but that crypto is just for drug lords and terrorists, or I guess now rogue states and murderous regimes, but still crime. That's what a lot of people seem to think that crypto is good for. And frankly, it is uncalled for, but it persists. So maybe this will help. The U.S. Treasury Department recently released 3 reports. These are annual reports that cover 3 topics. The topics are the 3 of the types of crimes that Treasury cares about. Money laundering, terrorist financing, and proliferation financing. Now, their most recently released report covered virtual assets extensively. And while their report did call out the risk that cryptocurrency presents for these types of crimes, they specifically noted that fiat currency and traditional finance methods are far more commonly used. Now, on to money laundering specifically. The National Money Laundering Risk Assessment said that the virtual assets are an ever-changing world, and it's in this world that money launderers find tricks for hiding their cash. They did specifically call out DeFi and what they're calling anonymity-enhancing technologies. Now, we've talked about those. They're mixers, where basically people put their crypto in to hide where their crypto is coming from, and then they get it out, and it's also supposed to hide where the money is going. Now, notice I said people, not criminals, because normal citizens can want anonymity without being criminals. But anyway, frankly, they're not of great use for criminals, to be quite honest. We talked about them recently. I pointed out that one couple, they had some $5+ billion in crypto assets that they really couldn't use because it was dirty and everybody knew it. They were reduced to buying Walmart gift cards $500 at a time as an attempt to get at that money, and even that got them caught. So, that's the problem. That's the thing about using a distributed ledger. Everybody who wants to know what's going on financially can do so. That's exactly the point. Keep your transactions open and honest and available to everyone, which are not ideal conditions for hiding illicit gains. But that said, virtual assets have been the target of an ungodly number of phishing attacks and ransomware scams. And these scumbags promise their targets amazing gains from the market to bait them in to revealing their personal information. And then if they do get access to the machine via spyware or something, or once their victims comply, then the attackers start making the demands and they want to get paid in Bitcoin. That said, it's not all unicorns and rainbows. No, in fact, the use of crypto as a means of laundering money, including drug money, that is climbing. And that lines up with a report by Chainalysis. In their crime report, they call out that more money was sent to criminal blockchain addresses last year than was ever sent before. But all of that aside, Treasury will tell you, Fiat is still champ when it comes to dirty money. Because on the one hand, it might sound like a peer-to-peer transaction system combined with self-custodial wallets would be great for criminals. The reality is it falls far short. Now, this has become a huge area of concern. You've got officials scrambling around to make sure that the Russian kleptocrats won't be able to avoid sanctions via crypto. And that's something that Senator Warren brings up quite frequently of late. Tom Robinson is the CEO of a blockchain analysis firm I've mentioned a few times here, Elliptic. He noted that crypto can be used for sanctions evasions, but isn't, quote, a silver bullet. Coinbase sued over claims of unregistered crypto securities. Specifically, there are some 79 cryptocurrencies that are at the heart of this. And this is a class action lawsuit by users. This isn't the SEC or someone legal coming after Coinbase. Now, the actual accusation behind this suit is that Coinbase let customers trade some 79 different currencies that are unregistered securities. So some of these currencies are XRP, Doge, and Shiba Inu. Now, the lead plaintiffs are, in fact, Coinbase users, like I said. Christopher Underwood, Louis Oberlander, and Henry Rodriguez are the lead plaintiffs. They allege that from October 2019 on, Coinbase allowed their customers to sell currencies without telling them that they're securities, much less unregistered securities. They point out that none of these are securities that are registered with the SEC or any state regulators. And further, Coinbase is not licensed as a security exchange or as a broker-dealer. They claim, quote, Coinbase's sale of these coins violates both the federal and state law. And while they are the lead plaintiffs, anyone who purchased any of these coins from Coinbase or Coinbase Pro from October 8th, 2019 on to present is able to join the suit. People might ask why this is a big deal, right? Everybody is an adult, everybody knows the risks, or do they? Here's what the plaintiffs say, quote, purchasers do not have access to the disclosures that accompany the issuances of traditional securities. Rather, investors receive, at most, only the so-called white papers, which describe the token, but do not satisfy the requirements for a prospectus under federal and state securities laws. SEC Chairman Gary Gensler gets named in this filing a lot of times. He is someone who has said many times that he does not think that there is enough investor protection in crypto. He's also said that some exchanges hold 50 to 100 tokens, any number of which might be securities. Now here's the problem. It doesn't look like the SEC is very interested in actively classifying which currencies belong in which category. They're not being very forthcoming about which ones are securities. It's like they don't want to put the final stamp on and say, this is the law. Now, XRP and SEC have been fighting about whether it is, in fact, a security or not. In December of 2019, the SEC sued Ripple Labs and two of the executives over the sale of XRP. They claimed XRP is an unregistered security. Ripple, of course, disagrees. And this lawsuit is still ongoing. Now, as far as the class action suit goes, in the legal document, it says, quote, "This case is a class action where the aggregate claims of all members of the proposed classes exceed $5 million exclusive of interest and costs. And that the plaintiffs seek to, quote, recover damages, consideration paid for tokens and trading fees, together with the interest thereon, as well as attorney's fees and costs to the fullest extent permitted by law." And that's going to do it for us tonight. Thank you so much for joining us. I really do appreciate it. So let me ask you this. What do you think? My experience says that when crypto starts leaving exchanges, well, that supply shock has a definite effect on the price. But I know there have certainly been times where a bunch of Bitcoin has left the exchange and the price still dropped. So I'm not the expert. Maybe you are. Tell me what you think. Send me an email at crypto.overnighter@gmail.com. That's crypto.overnighter@gmail.com. Oh, and give Crypto in 5 Minutes a lesson. We're up to 34 educational podcasts, 5 minutes to explain one concept in crypto. And until next time, may peace